Hello, everyone, and welcome to this latest Community webinar. We are live now with an audience of several hundred globally, and our topic today is distributor financing, if you like, the other side of supply chain financing. We're used to the idea of supply chain finance from raw materials to production, but of course the other side of that is those stages from production to the end user. How do we finance that? Before we get started, my name is Mike Hewitt, and I'm from Adagio Media. I'll be your moderator today. Just some housekeeping points. If you're joining us, you will be able to ask questions. And if you look to the right of your screen, you should see 3 tabs: questions, polls, and people. If you can't see that, then click on the little white arrow on a black background, and that should reveal it for you. So you can ask questions by typing them into that field. I'll be checking those questions throughout today's webinar, and we will be asking them of our speakers at the end of our session. And we're looking here at about 45 minutes, so sit back and get ready for that. And what a lineup of speakers we have. We're going to start with Luca Gelsomino from the supply chain finance community, who's going to give us an overview of this topic and the spread of distributor finance. Ramesh Narayanan from Michelin is going to be giving us a client-side view of what his company has been doing in terms of getting finance into that distribution chain. And we're really pleased to have Hongjing Yang, Mr. Yang from Hire, which is doing some really advanced things in terms of getting finance into the hands of its distributors within China, and of course working with DBS Bank to do that. And finally, we have Bruce Alter from DBS Bank to give us the finance providers' perspective on how these distributor finance programs can be made to work best. So why is distributor finance important at all? And if you've been reading any of the Treasury or finance or procurement press, you'll know that distributor finance has been going to be the next big thing right back to about 2003. Some people have been doing it with some success, and of course the aim is to bridge that gap between distributors paying for goods and being paid by customers. Even more important in this time of global pandemic, that as distributors begin to start selling again, as customers are beginning to buy, they're going to need to be able to buy the goods that they're selling, and finance is an essential component of that. So can the provider of those goods offer finance at a better rate than might be commercially available? In other words, as we move, we'd all like to hope, towards the later stages of the pandemic, could this return to growth be the time for distributor finance to really take off? Could this be the moment when it starts to become a standard part of tool set for supply finance? So let's do what we always do and ask the audience. If you go to that right-hand tab, you will see a poll. Just click on the tab that says polls. And all we'd like to know from you is where you are in terms of distributor financing. And we don't mind, maybe you're a corporate thinking about putting a distributor finance scheme in place, or perhaps you are a fintech or a bank. But let's just see where you are. Are you not considering it? You really haven't thought about it? Are you interested in the idea? And you're actively looking at perhaps whether you might put a distributor financing program in place? Are you evaluating? Have you decided this is something you really want to do, but you haven't yet chosen a program provider? Or do you already have a program in place? And voting is as simple as clicking on one of those options. Later in today's webinar, I will share the results of that poll with you. But I can see right now already we have a clear lead for interested, which makes absolute sense. So around 57% of the people online right now are interested in the idea of distributor finance. Another 20% are actively evaluating potential providers. Only 13% have a program in place, but just 7% are not considering it, which I guess makes sense, because if you aren't even considering distributor finance, this would be a very strange way to spend 45 minutes of your time. Now, I can see that our first speaker, Luca Gelsomino, has lost his internet connection. So we're going to have some issues getting Luca's presentation to you, but let's not concern ourselves with that. Continue with your voting, and as Luca comes back online, welcome back, Luca.
I'm here. I hope you can still hear me.
From our webinar. I do appreciate that this section was a little bit boring, so I quite understand why you felt the need to drop out, but we're delighted to have you back. So, ladies and gentlemen, we can now see the voting has continued and still a clear lead. 56% of the people on this webinar are interested in the idea of distributor finance, and 22% are evaluating solutions. 17% already have a program in place. So for the very small number who are interested or maybe even not considering it yet, Luca, can you give us some background into distributor finance and why it's important and what's happening? Over to you.
Absolutely. Can you still hear me?
Sorry, Luca. Yes, we can. You are absolutely audible and visible. This is good.
Excellent. So my name is Luca Gelsomino. As Mike said, I'm the academic director of the STF community, and I am also a senior researcher at Windesheim, University of Applied Sciences in the Netherlands. But let's cut to the chase and let's talk about the topic of today, which is distributor finance. As Mike said, the title of this webinar is The Other Side of STF, and distributor finance is indeed the other side, in the sense that we usually think about supply chain finance as financing suppliers. The upstream, distributor finance, looks at the downstream. And that is not only a philosophical difference, it's also a very practical sophistication in the way in which we think about financing, because in financing, your supplier, the set of suppliers, you have one anchor buyer, which is in the end the one that is paying. When you finance a distributor chain, you have a multitude of entities that are going to pay, and that complicates things a lot. And that is probably, even if we don't know that for certain, the reason why distributor finance is still not as structured and as widespread as financing suppliers, for example, with reverse factoring, which is now a very mature product. But nonetheless, we have examples of how distributor finance might work. And for the sake of this webinar, we have put this example framework to help present, let's say, a conceptualization of the different forms in which you can finance your distribution chain. The easiest way you can do that is a very informal way in which you have an anchor supplier, in this case an anchor company, let's say, that is informally financing its distributor chain through their own means and their own cash. And that's the easiest way to do that. That's similar to the very easy and informal way in which back in the days, decades ago, some buyers started to finance their own suppliers through their own means, for example, by paying them very early or before they even started production. Then we have a second, let's say, wave of distributor finance, which is focused on account payables and receivables, and which usually includes some dimension related to traditional factoring solutions, even though with a distributor finance setting in mind rather than a simple financing account receivables in mind. And then we have a third way, which is focused on the product itself, the product that is getting distributed through the distribution chain, and that becomes the core of the distributor financing solution. And these forms of distributor financing usually include some dimension and concepts related to what we call inventory financing. So I will give you three examples. Unfortunately, I cannot disclose the names of the companies involved, but I will give you three examples of companies that are involved in these three types of distributor financing. Informal, that's the first one. Very easy. I don't have a slide about it. A couple of years ago, we spoke with a company here in the Netherlands that is in the apparel industry, clothing, and they have a very widespread distribution chain in Africa with distributors that buy their clothes and distribute them. And when this guy, the CFO of the company, was telling me about this distribution chain, I asked him, well, but do you have some kind of distribution finance in place? Because I assume you might encounter some problems with financing these distributors. And he told me, oh yeah, sure, we have Distributor Finance in place. It works like this. We go to the distributor and they pay us with a check, with a paper check. And when they pay us, we tell them, okay, how long do we have to wait before we check in this paper check? And that's how we do Distributor Finance. That's a very informal but effective way of doing Distributor Finance. So the distributor tells you, well, I need 3-4 weeks before I can fix my cash flow. So please sit on that check for a while, and then you can cash it out. Informal way of doing Distributor Finance, but of course that means with your own money, with your own cash flow, with your own resources. What is beyond this? What are the more structured way in which you can do this? The first one, I'll give you an example of a Dutch manufacturer of technology for retailers. Warehouse technology, the things that sound when there is a shoplifter, that kind of stuff. Technology that they sell to distributors all across Europe, and those distributors sell to retailers, shops around their own countries. So this manufacturer in the Netherlands makes a couple $100 million of revenues every year. They have distributors in the different countries. What is their main problem is that distributors have widely spread payment terms. In countries like, unfortunately, Italy, payment terms are very, very long. In countries like Germany or the Netherlands, they're very short. And they said, well, we would like to have harmonious payment terms. So how do we do that? They discussed it with a financial partner, and they set up a structure by which they sell the product to distributors, and they have a factoring with maturity contract with a financial partner that includes the entire account receivable portfolio, no matter where the distributor is exactly. And the different distributors, with the help and in collaboration with the manufacturer, are able to discuss with the partner the condition by which they can defer payment and paying interest by 30, 45, 60, or even 90 days. So distributor in Germany will not see any change, will not have to pay any charge, because they will pay on 30 days. So they will not extend payment terms with a financial partner, but a distributor in Italy will have the possibility to pay a little charge and extend payment terms up to 60 or 90 days. And they will have a discussion with the manufacturer and the financial partner on the price, the commercial price, and the price of the interest rate that the financial partner will charge on the program. And this is a very easy but effective way, more structured way to finance your distribution chain that does not involve using your own cash. Of course, what is the gain for the financial partner? The gain for the financial partner is that they have a factoring contract that includes the entire account receivables portfolio of the manufacturer, even for German distributors that are very reliable. Last example, a more extensive solution. We have a manufacturer, European manufacturer of healthcare devices, machineries for hospital and that kind of stuff. They have a similar problem. They want to finance their distribution chain. What is the solution that they put in place? Well, they basically sell the device to distributors like they used to, and they have a factoring maturity contract with a financial partner. But then there is a second step, which is that the partner buys the device from the distributor, and then the distributor carries on the contractual relationship and the selling process with the hospital and whatever. And in this setting, then the distributor finds the customer and arrange for the sale of the device, but the device is owned by the financial partner. The healthcare customer then is able to set up a leasing agreement with the financial partner and will pay the financial partner over years. In this way, the device manufacturer is, let's say, safe financially because they get the money in 30 days from the financial partner. The distributor does not have huge problem with cash flow because they sell the device immediately to the financial partner and don't have the device on their balance sheet anymore. And the healthcare customer can access very easily a leasing contract, and they don't have to upfront the entire cost of the machinery. So it's a more sophisticated way, and that focuses on the product as the key for the solution. That's why we say that is more product focused. Very quick examples. I'm available to give you more details, but before I move forward, just one last slide with what are the trends and why do we talk about distributor finance today. First of all, distributor finance will be more and more important in the future. As Mike said, it will be critical to improve in the way in which we monitor assets and the way in which we analyze unstructured data from our distributor chain. There is a change of mentality needed in all the players that are involved in distributor finance. And last but not least, if we will see a trend in circular economy, then distributor finance will become much, much more relevant than it is today. That is my last slide, I think. So I'm open to any kind of question.
Thank you. And I can see that we have some questions coming in. Thank you, Jan Janssen. I'm going to hold these questions until all our speakers have contributed, and then I'll put them to our panel at that point. If you do want to capture that rather beautiful QR code, you can access the SCF Communities training course. And in the meantime, thank you, Luca. We will come back to you a little bit later on. But now it's time to get to a case study where we're fortunate to be able to talk to the man who put this in place. So Ramesh from Michelin, can I hand over to you and ask you to tell us something about how your company has been using distributor finance?
Okay, thank you, Mike. Certainly. Good afternoon, those in Asia, and good morning, those in Europe. And first of all, thank you for the opportunity for the organizers and also ACTS, who is also a partner for this program. I am Ramesh Narayanan. I'm working in Michelin Asia Pacific in Singapore. Okay, so I take care of cash management for the zone as well as the cash-related project. Okay, so for those who do not know Michelin, just briefly, we are a worldwide leader in the mobility. So we have tires for all the range, right from bicycle to car, truck, aeroplane, and agriculture and mining everywhere. Also, we have mobility-related product, like for example, I can quote you a green guide or the red guide, where they will provide, like a Michelin star for the good restaurant and also for the transportation map. So it will serve global mobility. That's really our objective. Okay. So in this session, I'm going to share 2 slides, basically to share our experience. Okay. Firstly, from Michelin perspective, I mean from our entity perspective actually. So we are a seller, then we are giving the tires or products to our customers. Okay. So what we have done, we have implemented a distributor financing in Thailand and Japan. Okay, it is working well actually. Some of them call dealer financing also, so just the words, how they use it. And then we are right now in a new implementation in progress for Indonesia. It should be ready before end of this year. That's our, it's going very well actually. And then in this scheme, what we have typically, the seller, Michelin, we receive the payment on the due date based on the TOP. It can be like a 30 days, 60 days, whatever thing. And this is done without recourse basis from the bank. Okay. And then the bank, the distributor financing bank, extend the credit to the customers. The interest rate for the extended credit period, I mean, beyond the normal TOP will be borne by the buyer. Okay. So from Michelin side, our exposure is restricted, our expense also restricted. Okay. And it supports us in increasing the sales. I mean, we can give another product to the customer actually, another option to the customer when they're buying the goods. And also it helps us to make sure the collection is on due date because we receive from the bank. And then it eliminates the risk from our balance sheet. So it's a win-win situation within Michelin as a seller, but in different team. which is treasury, credit, commercial. So we really like this product, how it works. So far it is working well. Let me take you to the next slide, wherein we explain about the customer perspective, the buyer. Okay. Typically, the buyers find it is an additional source of funding than the regular credit facilities with the banks actually. So this bank need not be their regular banks what they are doing in credit facilities. It can be a different bank actually, so no restriction on that. And then the facility amount and the interest rate, it is done based on the risk profile of the buyer. Okay, so we do have the credit rating in every country. So depending on the rating, they may get a better rate or slightly expensive. That really depends on the bank's evaluation of the risk profile. Okay, and our customers find it is generally cheaper than the normal funding source. The reason is also because this financing is restricted to the seller's entity, the product or the seller's entity. For example, Michelin, we have the tires, so it is restricted to buy the Michelin tires. That's where the banks are able to offer a better price. Okay, and often next item is about the KYC. It's often not the very the topic everyone likes it, whether it is bank or the customer. Nowadays, they become complicated. But we find that in the distributor financing, this is slightly better in terms of onboarding and then completing the KYC. So that helps us a lot in moving forward. And typically in this program, the buyer, customer will have access to e-banking, okay, and then they have the option to select which are the invoices they want to take a financing. For example, in some time, they may have a lot of excess cash. In this time, they can choose, okay, I don't want financing for this invoice, I just leave it. For some other time, you may be able to use the financing, okay. So these are the quick facts and our experience from the seller as well as the customer perspective, okay. So I end my presentation here. I'll be happy to take any question in the Q&A session. And thank you again, and I leave it to the next speaker to continue. Thank you.
Great, that was tremendous. Thank you very much. And we already have several questions coming in on this topic. I'm going to save most of them until the end, but thanks Prabal Krishna, Patrine Tung and Jan Janssen, who already have questions. Speakers, if you want to have a look at that, and indeed audience, you can see those in the questions tab, and you can upvote any questions that you also would like the answer to, and I will get to these towards the end of the webinar. Now, I mentioned that we have a presentation from Hire, and the fact is that I suspect, in common with many of the people on this webinar, my grasp of Chinese is not really up to understanding a full presentation in Mandarin. So we've been lucky enough to persuade Mr. Yang from Hire to pre-record a short video presentation on the Hire case study. But I can reassure you that Mr. Yang is here in person and will be able to answer your questions after the video later on. But before we get there, let's have a look at this solution.
供应链金融，实际上我们给客户提供了一种选择，因为我们的经销商很多都是县区的、乡镇的，他们和金融机构打交道有些困难它规模也比较小。那么我们通过核心企业来引进优势的这些金融机构，通过数字化的方式，让这些经销商能够从大型的这些银行能够贷到款，而且成本比较低。这样的一个平台呢，我想对我们的经销商的业务会有很大的支持。那对经销商的支持，也就是对我们的支持。未来的竞争，供应链的竞争，是未来国与国之间的竞争，企业与企业之间的竞争的重要的竞争领域。那么海尔作为一个国际化的公司，直接面临到全球的竞争。那全球竞争的重要的领域就是供应链的竞争。那供应链的竞争，其中最重要的一个领域、一个环节或者一个领域，就是 流动性的竞争。那么谁的生态圈拿到的流动性最多，谁的生态圈拿到的流动性的成本最低，谁就有领先的可能性。那我这里想的生态圈的融资成本，而不是海尔的融资成本，就是我们上游的融资成本，我们下游的成本，我们整体的流动性的整体的我们的产业链的融资成本，这才是一个未来的一个竞争的优势所需要关注的地方。我个人觉得，就数字化会对未来的商业模式和产业链产生巨大的影响。那么从我们和银行的合作来看，就从这个点来看，那原来我们银行需要用分支机构开设分支机构做这个支行半径5公里以内的业务。那么我们通过数字化我没有去过意大利，我们团队也没有去过意大利，我也没去过美国，我们照样可以做全世界各地的业务。我们的合作银行哪怕在青岛没有分支机构，也是可以和我们所有的全球的客户合作。就数字化会对商业模式产生巨大的影响，也会对供应链产生巨大的影响。供应链金融的平台实际上是一个开放的平台我们欢迎不同的银行，处于不同规模的和不同发展状态的银行来我们上面来做这个生意但是呢，对于引进银行，我们也有自己的规则。那么和海外外资银行合作，我们基本上是按照环球财经杂志每年对供应链金融领域评奖的结果来筛选银行的DBS 2020年是亚洲的供应链金融的最佳银行，环球财经杂志。因为我们的企业呢，我们的子公司基本上覆盖了全球各个主要的国家因此我们希望在不同的大洲、不同的国家有优势的银行和我们合作，来推动供应链金融的最佳银行，环球财经杂志。因为我们的企业呢，我们的子公司基本上覆盖了全球各个主要的国家因此我们希望在不同的大洲、不同的国家有优势的银行和我们合作，在不同的大洲、不同的国家有优势的银行和我们合作，来推动供应链金融的这一块的业务的进展。我们和星展银行的合作也有很多年，因为我们公司很多其他的业务板块也有多种多样的合作。那么供应链金融的合作，我们是从2019年开始的那么这次疫情呢，实际上加速了我们之间的合作的项目的进展在疫情期间呢全球性的，那么无论是整个国家来讲，还是企业来讲还是企业的上下游客户来讲都受到了这次疫情呢，实际上加速了我们之间的合作的项目的进展在疫情期间呢全球性的，那么无论是整个国家来讲，还是企业来讲还是企业的上下游客户来讲都受到了流动性的挑战。那还是企业来讲还是企业的上下游客户来讲都受到了流动性的挑战。那如何在疫情过后迅速的恢复经济，企业能够迅速的激活市场，这是所有全球任何一个迅速的恢复经济，企业能够迅速的激活市场，这是所有全球任何一个政府、任何一个企业所面临的共同的挑战，包括银行也是一样。那么我们觉得就是快速的启动市场，流动性非常重要。那企业和银行的合作就是快速启动市场的一种很有效的措施。这种挑战都是我们感同身受，对吧？这种挑战是全球的它首先所有的生意都非常重要。那企业和银行的合作 就是快速启动市场的一种很有效的措施。这种挑战都是我们感同身受，对吧？这种挑战是全球的它首先所有的生意都关闭了，整个经济活动几乎停止，这种挑战都是我们感同身受，对吧？这种挑战是全球的它首先所有的生意都关闭了，整个经济活动几乎停止。那么3月份开始重启那么我们如何快速的恢复经销商的信心？这很重要，他首先要进货，要对未来要有信心。那么在当时的情况下，可能在传统线下他可能就拿不到流动性的这种资金，那如何让他能够快速的补充流动性，能够为未来做一个铺垫？因为工厂从原材料采购到生产到销售，它有一个过程的，活动几乎停止。那么3月份开始重启那么我们如何快速的恢复经销商的信心，快速的补充流动性，能够为未来做一个铺垫？因为工厂从原材料采购到生产到销售，它有一个过程的，我们后台供应链响应的速度还是要有一定的时间的所以说我们要尽早的让经销商要有信心要给他补充流动性，要有信心要给他补充流动性。那作为疫情来讲，冲击是短暂的，对行业的领导者来讲，在疫情过后，甚至疫情还没有结束，它只会更加强大。冲击最严重的是行业的尾部的这些企业，那行业集中度会更加的提升。作为头部企业，平时他对流动性的这种渴望，包括客户对流动性的需求更加的提升。作为头部企业，平时他对流动性的这种渴望，包括客户对流动性的需求，它稍微还是比较弱的。但在危机的过程中显然大家表达了很高的兴趣。危机的过程中显然大家表达了很高的兴趣。这时候如果金融机构把握住这种机会，就是建立联系、建立信任和建立业务的最好的时机，那么我们用我们的行动证明了这一点，对吧？在疫情还在发展的过程中，我们开放了我们的经销商业务，我们开放了我们海外发展的过程中，我们开放了我们的经销商业务，我们开放了我们海外的供应商业务，我们也会拿出我们大量的应收账款来做一些应收账款融资的尝试我想这些对流动性的措施不仅是我们公司应收账款融资的尝试我想这些对流动性的措施不仅是我们公司，也是供应链金融这个行业一个很大的发展的一个机会。因为所有的企业史无前例的重视 working capital。
So thanks very much for that, and I apologize to any of you who had some stuttering issues during that video. I guess that's one of the issues of transmitting video to so many people across the world. So as I mentioned, we have questions still coming in. We will come back to Mr. Yang shortly, along with our other speakers. But for now, we heard there about DBS Bank's close involvement in that program. So Bruce Alter, let me hand over to you to tell us more about your take on Distributor Finance.
Thank you very much. Can you hear me clearly?
Yes, we can.
Okay. First of all, it's a pleasure to be here and to be invited to this forum. And what I don't want to do is to reiterate a lot of the key points of what is distributor finance, which are great speakers already went into in the first 2 or 3 presentations. I can't see my presentation on the screen, so Mike, I'll rely on you to move the pages. but I don't have too many pages. I'm going to try and make it crisp and to the point. Distributor finance, in short, the value proposition which the audience heard today, if you look at it from an anchor's perspective, it's mainly to improve the bottom line.
I can see that we've lost Bruce. His internet connection has gone down at precisely the wrong time. He was halfway through his presentation, and enormously tempting though it is for me to simply complete it for him, I'm going to resist that temptation. So what we're going to do is move to take some questions, and then as soon as Bruce is back online, we'll get the last couple of slides. So again, everyone, if you have a question, do type it into that box on the right-hand side. And I can tell you right now that we have several questions that have been upvoted strongly. And the first one is from Prabal Krishna with 8 upvotes. Well done, Prabal. 2 questions from Prabal, which is cheating a little bit, you know, one per user, please, but we'll try and get to both of them. First question. Is the distributor finance backed by any collateral? And Ramesh, I suspect that was originally intended for you, but we're open to answers from anyone. And I may well ask Mr. Yang in a moment if there any collateral is provided for distributor finance. But Ramesh, can you give us an idea of whether in your program any collateral is required of the distributors? Ramesh, are you with us?
Yeah, sure, definitely. So I think from the customer perspective, they will have to provide, in some cases, the banks may be asking for a collateral from the customer's perspective. For the supplier, like Michelin, we are not providing any collateral.
So, okay, no collateral required from Michelin. That seems sensible. Mr. Yang, if I can turn to you, in the higher distributor finance program, is any collateral required from the distributors when they take up financing?
我们的经销商融资是不是有抵押物
OK， 那么我们经销商融资2种产品，一种是信用融资，是没有抵押物的。那么另外一种就是动产质押，在可以动态的实时的监管全国200多间仓库，这个出库入库都有数字化的管理。那么这个呢，支持我们上千个客户的融资。
So actually, we have 2 kinds of products. One is the credit finance for this distributor finance. On this one, we don't have any collateral. And second one is we have kind of a shuttle mortgage, something like a collateral of the movable goods in the warehouse. So this we have a kind of collateral is actually the inventory. You know, this is because Hire has a RIS logistic company. This company can help us to control those goods inside 100 warehouses across China. So we provide this collateral information to the bank now. So we have in the second product we have collateral.
So the goods themselves in the warehouse are the collateral, really. Yeah. Okay.
Yes.
We can see we have more questions coming in. I'm also aware that I believe we have Bruce, who has joined us by the miracle of the telephone. Diana, I think you have Bruce on the phone. Is that correct?
We have Bruce on the slide.
Okay, Bruce, I have your slides. You've got a couple to go, and you're currently on distributor finance value propositions. Let's see if we can hear you. Bruce, are you there?
Yes, testing, 1, 2, 3.
Yeah, we're definitely in communication, Bruce. Okay, you were just saying distributor finance, the value proposition. We have a lovely graphic here with DBS and the large corporate anchor and the distributor out there as the spoke. So please carry on, and I'll move the slides for you.
Very good. In the meantime, we're going to try and get me back online here, but that's fine. Let's talk to the first page. I don't know when I dropped off the presentation, but what I was saying is a lot of our speakers have already gone through the core of what is distributor financing, so I'm not going to spend too much time on this page, and I'm just going to talk about quickly what the value proposition is for a large corporate. Sometimes we call them an anchor, and it's really improving the top line revenue growth by doing this. It's improving the certainty, timeliness of the payments. It's enhancing that loyalty through the channel with the distributors. That's the core for the anchor side. And then for the distributor side, and sometimes banks will also refer to distributors as spokes, the benefit for a distributor would be enhancing purchasing the capacity of the distributor, increasing their market share, and also trying to get better terms, more favorable terms, compared with a bilateral lending. So that's the core, and I think our great speakers today already addressed that in the three presentations. So what I really wanted to jump into is the next page, and I'm hoping that everyone can see that. And that's talking about the digital journey. We've talked a lot about the proposition of digital, the value proposition, the core of digital. Mr. Yang talked a great deal about the way the world is moving towards a digital journey, if you will, and we see it. As a bank, we see it not just in our tools for distribution finance, but in numerous tools. And what you look at here is the left side of the page is a traditional supply chain finance side of things. On the right side, that's the distributor finance side of things. So without really even looking at the page, what I wanted to emphasize was 4 or 5 key points. During COVID-19 in China, when it hit especially hard, particularly hard, February, March, April, what we saw was there was very high adoption rate for various digital solutions, one of them being Distributor Finance Digital. And essentially, bottom line is less paper, and less paper is needed. And in fact, the customer does not need to leave a work from home type of environment. So that was a very, very big plus. Fortunately, we've done a lot of work in digital. I think I'm back online. If not, I'll go on mute right away.
I would carry on the phone, Bruce. We have a clear signal from you, and we can all see your slides. So for now, I would carry on.
Okay, fine. I just want to mute this. You know what? I'm just going to go off. Hang on 1 second. Okay.
That's great. Yeah, carry on.
Okay. So if I look at the 4 or 5 key things, I had mentioned that that during the COVID crisis, the first 4 or 5 months this year, clearly we saw adoption in digital type of solutions, one of which was Distributor Finance Digital, and Mr. Yang had alluded to that in his tape. The digital solution for distributors and for anchors, in short, it's providing via API. It's a link up for the bank, the anchor, and the distributors. And in the higher case, it's via the anchor's system, their platform. The other point is we can onboard distributors digitally online via a portal. There's no need for distributors to come to our offices, to the DBS offices. So that's a very big thing during these times. Saves a lot of time, a lot of effort, and paper, if you will. Digital onboarding for spokes, for distributors, and for suppliers in our supply chain models as well, our typical supply chain models as well. And we also use facial recognition technology. So having facial recognition technology certainly reduces risk. It takes out a lot of risk in the equation, and we can tie that back into a quick, seamless onboarding type of process. So if you add up, I think I just mentioned 4 different things. If you add that up, in conclusion, the digital capabilities for distributor finance, the 3 key things that you can take away is real-time information, the enablement of ease financing. It makes financing of the distributors easier. And also, I had mentioned that you mitigate risk. That facial recognition technology, other technologies, it's a great way to mitigate risk in the system. So those are the key points that I hope the audience will take away today in terms of the digital journey that so many of us are on now. We could just see it. And I think the higher video, the presentation from Mr. Young also demonstrated that. The last page is just the key takeaways. The key takeaways, clearly in the distributor finance model, you have anchors that are providing support to their distributors. It's great for them, the anchors, and it's great for their distributors. And in a distributor finance model, we of course, as a bank, we hope that you're tapping into our network across the country, across markets, looking to us for our market experience, understanding the risk, understanding the implications of doing distributor finance, as well as the digital applications. But I think that the most important point is the last point, which came through in some of the presentations, which is COVID, during COVID, post-COVID, we are definitely moving into a digital world. Digital is the new norm. And that is the key takeaway I wanted the audience to hear today, the digital aspects of distributor finance and what banks are doing, what banks like BDS are doing.
Bruce, thanks very much for that. We have a lot of questions. Bruce will stay with us on the phone, I hope, and can at least hear the questions, even if we can't see Bruce at the moment. So let's have a look at the most upvoted. Ines Campos asks, and I think I'm going to come here to Mr. Yang from Hire first, and then perhaps to you, Ramesh from Michelin. Ines asks, what is the accounting treatment of the transaction for buyers in the Michelin case study? Is it treated as commercial debt? So Ramesh, this is specific to Michelin, it turns out. So is it treated as debt, or are these payables? How are they treated from an accounting point of view?
Well, okay, thank you for the question. So for Michelin side, firstly, when we invoice it, it's just a normal commercial debt, okay? And then, as we explained, the agreement, the financing is between the distributor financing bank and the buyer, actually, right? So they taking the risk, and then that's arrangement between buyer and the bank. So for Michelin, we receive money on the due date from the bank, and then it is eliminated from our books of accounts, actually. So
okay,
that's accounting treatment. But on the buyer side, yes, they should be keeping it in their, because they have to still pay to the bank, so it will be a payable bank actually, on the buyer.
Got it. Okay, that makes sense. Now, in the interest of time, we have another question which I'd like to put to you, Mr. Yang from Hire. Ravati Naidu asks, what kind of sales impact can anchors expect by implementing a distributor finance program? So to put that another way,
OK，
yeah,
这个
sales increase. Does it help sales?
OK， 那么目前为止呢，我们一共有8家银行包括 DBS 在线支持我们全国的经销商融资。那现在经常发起融资的客户规模在1300家左右。目前来讲，通过融资支持我们国内这个专卖店渠道呢，占有10%的销售。这是一个比较目前的一个数字。我想这个明年可能这个数字会更大，因为我们正在拓展我们的一些连锁渠道，加入供应链金融使用银行的这个低成本的这个而且这个额度比较大的这个资金这样的话，我觉得最起码今年开启了一个很好的有一个很好的开端
Okay, so till now we have totally 8 banks joining Hire distributor finance program, including DBS. So we are using those banks are using Hire online digital platform to provide service to our distributors. And in number of the daily users that of our distributors, now we have 1,300 distributors these all are higher distributors. They are constantly using our platform to do finance service. So in the sales percentage, we can say that 10% of higher channel domestic sales were going through this finance program. And we expect next year, more chain shops of higher channel will join this program to utilize maximally the low-cost financing of our partners. Thank you.
那我还要补充的就是，那我们在和 DBS 这个合作的过程中那么在经销商融资 ，DBS 是我们唯一的合作的外资银行，那么从体验上来讲，这和 DBS 的合作的这个经销商的体验目前是最好的无论从开户供应商 onboarding 包括供应商发起融资的这种流程是最精简的我相信这个也会 DBS 在我们上面呢会获取更多的客户。
So one point to add is that DBS is the only overseas banks that join this program. All the other banks are Chinese banks. So, and among these banks, DBS actually provided the best experience, including, open accounting, onboarding, and on the financing process. So DBS are all leading. So we expect that DBS should gain better market share in higher platform. Thank you.
Excellent. Thank you very much for that. Luca Gelsomini, I'm going to come to you in a moment, and then Bruce, I have a question I can see on the list that's going to be for you. Luca, one of our questions is about the use of fintechs in the distributor finance programs. In your experience, are you seeing most distributor finance programs, particularly in Europe but globally, are people turning to banks to put these in place, or is this a market where fintechs are gaining market share?
Yeah, thank you. That's actually a fairly complex question to answer, because it's not just a matter of whether people turn to fintech rather than financial provider, but it's a question that involves a careful examination of legislations and regulations in the different countries. So if the distributor financing solution involves factoring, then this implies that only companies that are allowed to provide factoring solutions, which is a category that shifts between countries to countries in Europe, will be allowed to provide that kind of solution. It is possible to structure a distributor financing solution that can be offered by non-financial providers or fintech that do not have banking licenses, but that would be, let's say, I would say at this stage that will not be as sophisticated as something that a bank can offer. Unless, of course, the fintech in question is properly licensed to offer financial solutions.
Okay, makes absolute sense. Thank you for that. Bruce, if we can come to you. We have a couple of questions about how this quicker onboarding is achieved. And looking at your presentation and hearing what DBS had to say, you seem to have a pretty strong technical backing for this. Can you just talk to us very quickly about how it's possible to onboard people faster? What kind of technology is involved, if any?
Well, it's without giving away a lot of the secrets, because I know there's some competitors on the line. I would just say that it's providing an online tool for distributors, actually, it's not just the digital capability and providing that online tool for distributors, but it's also getting tremendous support and help from like Hire, who go out there and work with us and can talk to distributors, so it makes our life a little bit easier to get distributors engaged and we get the done. So what I would say at this point, Mike, is it's an online capability. What I would also say is this we're talking about today, distributor finance, but online capability, we also use for suppliers in the supply chain. We have other big customers where, in this case, Anchor would be a very big buyer, and we can also online onboard our suppliers, the buyer. So it's a great onboarding tool that we use for buyers that can be for suppliers. In this case, it's for distributors.
Okay. All right, makes absolute sense. We have many more questions. Sadly, our time is very nearly up, so I just have time to thank all our speakers today, from Michelin, from Hire, from Windesheim and the supply chain finance community, and from DBS. To thank all of you for your patience in being on the call and enduring our occasional technical issues, so thank you for that. And of course, to invite you to the next webinar in the SCF community webinar series. Next time, we're looking at some really interesting information from an ongoing research study from the Technical University at Munich, from David Woodker, looking at what's driving supplier finance and the real data behind supplier adoption in supplier finance programs. So for now, thank you for being involved. Do contact us directly if you have any suggestions or requests for future webinar topics. And once again, thank you very much to all our speakers. We really appreciate your time, and we hope to see you again at a webinar in the future. Goodbye, everyone. Thank you.